Hello and welcome to The View from the African Regional Conference 2015. I'm James King, the banker's regional editor, and I'm joined now by Nerina Visser, who is an exchange-traded funds advisor and strategist at ETF SA.
That's right.
Nerina, thank you for your time.
Thank you very much, and thanks for having me. It's wonderful to be able to share with people who can't be here at the conference via technology and via this medium, so thanks for the opportunity.
Now, I've really enjoyed just seeing you speak on the first securities panel for the ARC this year, and you were discussing some very interesting topics around the role that capital markets can play in sort of sustainable economic growth for the continent. Maybe you can talk us through just the general ideas behind that.
Yeah. You know what, I think some of the things that are quite obvious to me is that there's a lot of focus in Africa in terms of attracting investment flows from outside of the continent, the so-called FDI type of investments. And I'm of the opinion that there is a whole lot of capital already available on the African continent. We need to rather focus on how can we unlock this capital, how can we actually start getting this to move around and really empower the continent through its own capital, and thereby making it more resilient to the influences of what happens in financial markets in the rest of the world. So my focus, and especially around exchange-traded funds, is to look at ways that one can actually unlock some of this dead capital, and I'll explain what I mean with that dead capital shortly, but ways to really sort of mobilize that money and get it to the people that really need it. Because when you think in terms of capital markets, their primary purpose is really to bring together those that have capital and those that need capital. And I think a lot more can be done to actually empower Africans with their own capital and really grow to even higher heights than we're already growing at the moment. So let me maybe just talk a little bit about dead capital and what do I mean with that. Let's forget about the equity market for a while and focus maybe a little bit on the bond market. The majority of your sovereign financing in Africa, like in many other parts of the world also, focuses on sovereign debt. So issuances by government, and typically those bonds are issued to the big pension funds within their country, and they're very happy with the coupon that they receive. It services sort of their ongoing liability stream in terms of having to pay out monthly pensions to pensioners. But the capital, so not the coupons that are being paid, the capital amount is really dead capital. It's issued into a pension fund where it just sits and it does nothing. If we can find a way to actually mobilize some of that capital, get it to turn around in our economy and in our capital market, we can make that capital work a lot harder and actually be a lot more effective in its role as an enabler. So if you think in terms of a bond mutual fund or a unit trust or a collective investment scheme, whichever way you want to refer to it, if you have a fund with such bonds, such sovereign bonds contained in it, and you make those units, the participatory units of those bonds, which is essentially what an ETF is, the ETF units, you make that available via the stock market where people can actually go and trade and buy a small portion of that bond. It creates new capital flow into the system, which then ultimately enables the pension fund and ultimately the government to issue additional capacity and additional debt, which can then be issued to address some of those much needed infrastructure requirements that we've got on the continent. Whether it's physical infrastructure or whether it's technological infrastructure, whether it is about healthcare, whether it is about building schools, roads, whatever it might be. It's a means of getting small bits of money of individual investors, collectively get it together and thereby channel it back into the system. And that's really, for me, financial empowerment.
So there's a huge role there for the capital markets. But also one of the issues obviously we're hearing time and again over this conference is the idea of building up sort of the maturity, depth and liquidity in capital markets on the continent. And you were saying earlier there's a role here to be played for the introduction of new products to achieve this.
Exactly. So I think when we look at exchange-traded funds, they can do exactly that. And when you look at exchange-traded funds in the global context, typically these are offered in markets where the underlying securities market is already very liquid and deep. So many people are quite concerned that if you introduce something like this into a market that has got very limited liquidity, like the African capital markets, you're going to suck even more liquidity out of the system rather than introduce additional liquidity into the system. But I would like to introduce the concept of an unsponsored depository receipt, which in my mind is essentially a single stock ETF. What you have in a situation like this is that the company whose shares are being offered to a local stock market via an unsponsored depository receipt, they don't have to go through either the cost or the regulatory exercise of listing on a particular market. This is a means to bring the financial product and the instrument to that market, allow participation by the local community in a share which probably already operates on their market. And one of the best examples of that for me is MTN in Nigeria. MTN currently generates 60% of their revenue from the Nigerian market, but it's not listed on the Nigerian Stock Exchange. So for a Nigerian national to participate in this big part of their own economy, they have to go to the Johannesburg Stock Exchange to actually buy participation in MTN. If you were to list an unsponsored depository receipt of MTN shares on the Nigerian Stock Exchange, bear in mind this is a fully asset-backed product that we're talking about. It's not a derivative, it's not a quantitatively created, some elusive thing. It's really just repackaging something that is already physically available in another market, but making it more readily accessible to the market where it is very relevant. I used MTN as an example. There are numerous examples of that where global national companies operate on the African continent, but their stock exchange listings are in other parts of the world, and I see this as a form of neocolonialism. It is once again Africa's wealth that is exported from the continent, and the people of the continent don't actually have the ability to participate in this wealth creation process and directly benefit from the very high growth rates that Africa is producing.
You've obviously been working in the ETF space for a number of years now, and I'm keen to understand, in South Africa, who is buying into ETFs?
Right, so ETFs in South Africa have been around since 2000, so recently celebrated the 15th birthday. But it was really only in sort of the last 5 years that the offering has really expanded quite dramatically. And there are currently 70 exchange-traded products listed on the JSE, and it now covers all asset classes. So different types of equity products, but also bonds, listed property, even international investments, direct commodities and currency. So it really allows investors to construct entire portfolios, balanced fund portfolios, consisting just of exchange-traded products. So from that point of view, one would think that it would suit the institutional investor quite well as well. But the distribution channel and the administration channel around institutional investment management still focuses a lot on direct access, and therefore we don't see large uptake in the institutional market, but we have significant uptake in the retail market, where because ETFs are so transparent and easy to understand, retail investors are increasingly entering sort of the DIY type of space of investing. The whole advent of robo-advisors and the millennial generation say, I understand these products, they now are available to me that I can do my own investment and trading. So the biggest uptake by far is in the retail space, but where you do find institutions make use of it is particular assets that are difficult to access otherwise. So physical commodities, for example. So we have significant exchange-traded funds in gold, in physical platinum, physical palladium, and then even exchange-traded notes, which give you access to the likes of Brent crude oil or the copper, physical copper as well, or emerging markets, other African markets. So it really does cover quite a wide spectrum.
Thank you so much for taking the time to speak with us, and I hope you enjoy the rest of the conference.
Thank you very much.
Thank you.